You're going to see some things that you'll say, hold on a minute, Gavin, that's the opposite of weakness. And the thing looks that if you turn the whole chart upside down, we'd have the opposite. Well, that's exactly right, isn't it, Philip?
Exactly.
If you turn the chart topsy-turvy,
yes,
it's the same thing.
Yes.
Now, that sounds, again, you look at that, but when you see this, it's exactly, if the market's bullish in the bull run, we're looking to take trades at the bottom of an uptrend channel on low volume, narrow spread tests.
And as proof of that, you could print a chart out, turn it upside down, and you'll see the principles upside down.
Absolutely. Right. So what are signs of strength? They're down bars, okay? Narrow spread closing in the middle or low. The volume can be high or low, much the same as signs of weakness would be signs of strength. But this time they're not on up bars, they're on down bars. And let's remember, a down bar is a price bar that closes lower than the bar behind it. Okay, that's important. A narrow spread on the bar indicates there's no professional selling there. This buying will prevent any attempt to move up. So their narrow spread means they're buying on the down bar, not selling. Ultra high volume down bars. Now these are the classic moves of smart money, as we're going to show you. It's a trap most often, especially to catch people, you know, who are basically short and they want to get them to add to their positions. But actually widespread down bars on high volume are very, very strong if they're immediately tested, as we'll show you. If you get low volume, it's just telling us, much the same as the upside, that professional money is withdrawing its interest to the downside. Now, if you get high volume on a down bar, it tells you that professionals are buying into the public selling. And a great chart that you can find to prove this and how it works would be the chart just after the September 11 attacks in 2001. And do you remember, Philip, the newscasters all over the world were, you know, Tony Blair, George Bush, doom and gloom on their face, Al-Qaeda everywhere, the financial markets could collapse, people are selling.
Absolutely, yes.
Now the professional money, the VSA experts as well, were thinking, well, look at what happens here, let's have a look at the chart. And you'll notice for 2 or 3 days the market plummets, volume's high, but then on that last day, I think it was the third or fourth day, you get this nice little gap down thing and it's a nice narrow spread. Now, bag holding, we're going to show them. But this is the professional money opening up their bag, saying, well, give us all your shares, people, because we know this is going to be a bull market. And we're bullish here. Nothing wrong with these stocks at all. You're just listening to the news. Let's look at one of the first principles now. This is called a bottom reversal. It's the opposite of a top reversal. It's a widespread down bar closing on the low. The low and the close is lower than the previous 4 bars, followed by an up bar on a wide plus spread closing on the highs. Now this will arrive in a variety of versions, but basically the first down bar is what we call a shakeout, usually on, and we've called it so-called bad news. So let's have a look at this. We're going to look at JP Morgan, okay, again one we've been following. Now we see here, look, now notice that the market has fallen, which it had done, and we see an increase on the wide-ranging bar here. Now notice this bar here, it comes down, it closes just off the low of the bar, but this bar then closes up and takes out the bar behind it. Okay, now this is almost the opposite of the, well, it is the opposite of what we call a top reversal. But what makes this whole thing so interesting is we get this bar here that, if you didn't have the uptrend in front of you, would look like an upthrust. Philip, why isn't that a genuine upthrust?
Well, if you look at the previous bar in isolation looks as if it contains supply, because it's an up bar and it's got an increase in volume.
Yep.
But the whole point about that is that it's taken out the high of the previous bar.
That's important.
Now that takes effort to do that. Remember, it's effort versus result.
That's another.
The effort is the increase in volume. The result is that it's managed to take out the high of the previous bar. That shows strength to do that. So we know that there must be some strength in there. And that's one of the, again, there's a rare occasion where an up bar with increased volume can actually show some strength. And
you wouldn't do anything there on the trade here. When the next bar closes up here, as you see, you've immediately thought, well, that the strength here is held. This next bar is almost like a test. Now, this is an up bar. The volume is left on the previous 2 bars, Philip. It's not no demand. Just that to me looks like an up bar test. It's almost pushed down. The volume's pretty low, and it's risen to close on its high, which I would consider to be bullish.
On a smaller time frame, that's probably testing the supply on the previous bar with a narrow spread increase in volume.
You mean like a 4-hour or 2-hour
Yes,
chart or
yes,
something? Yeah,
yes.
because the
I
daily
think-
charts look slightly different.
Yeah, if you went down a smaller time frame, I think you would almost certainly see that's a test. And just going back to that 2-bar reversal again, that second bar is, if you like, that's a form of absorption volume. We talked about that on up bars, and that's really what you're seeing there.
Yep, absolutely. And then, of course, we do go up in an uptrend, and you'll notice that we do get tests, real nice ones, which we're going to come to. I'm not going to focus on those, but you do get really nice testing. Okay, Bradford Brown just actually went and looked at the chart on the 30-minute. It's got a big green signal, no supply test.
Excellent.
So for those of you who want to check that, okay, the date down here was the 6th of March on the weekly. And if you go down and you go to the daily charts on there, because this is a weekly, if you go down to the daily, you'll find no supply test bars. And if you break that down during the day, you'll see no supply tests all along there. Okay. AMET, now this is one that you picked up, Philip, so can you talk us through that one? Because I'll talk about where the green bar is, the green arrow. I'd like to talk about the significance of that, but if you can talk about the bottom reversal again and what happens here.
I think that's Applied Material. I believe that's a Nasdaq stock from memory, or an S&P stock, which I picked out. Again, you've got, first of all, you've got a period of falling prices before bar A. That's important before you get a bottom reversal. The first bar is down, bar A is a down bar. It's closed off the lows with an increase in volume. But what's more important is bar B, which is pushed up, and it's closed just above the higher bar A.
That is a perfect bottom reversal, isn't it, on that volume? That's
a textbook example, that one.
You see that at the bottom here, and then you get a test here. Isn't that great?
Immediately testing the supply on bar B straight away.
And then succeeding.
Yes.
Yeah. So there, take that. That's 3 bars there. That when you see that, widespread down, volume's very high compared to the previous bars. The next bar goes straight back up, takes out the previous high of this bar, closes up on the high, so there has to be some buying in these 2 bars. Then it comes back into the body of the bar. The volume's much, much lower, as you can see, than most of the other bars. And then the next bar closes higher, and we begin to go up. Now, you say, well, if I was long here, we suddenly get this happen, and we come back down into the same area. Now, Philip, why do they do that? Why do they bring the market back down into that area?
Well, they probably want to continue their accumulation phase.
Now, what would happen here? Now, someone's long here. Would you use a trailing stop to lock in profit as it moved up? Because you'd certainly got stopped out on this bar here. And as it's come back down, and this has happened to me several times, where you move a stop with the price, you put it below the low of the bar in an uptrend. Now, this is a simple uptrend. You've got an up bar, up bar, up bar, level bar, we ignore that, up bar, up bar. Suddenly we've got a down bar, we've got 3 down bars. You'd have been stopped out. So you think to yourself, oh, was I wrong here? Well, actually, you know, when we see this bar here, where this was first acting as resistance, if it comes back up to there and pushes through it, and then comes back down to C, to that price area, and we see a clear no supply bar, which we'll talk about later, that is another great place to enter a trade. Don't be frightened to get back in. But it says if we, and let me explain it. What I've said here, because this stock is this was taken only a few days ago, so it's actually fairly current. Okay, so it was so it's 27th of Feb on this bar. So here, what I'm saying is, if we're going to look at buying this stock, we're going to look to go into a phase of accumulation. We certainly should have some support here around £11.50, and we know we've already got resistance at £13. Now, if we break £13 and start to go up, I've got a target above me of £15, so that could be a nice move. But to buy it, I've put here, look for a test or no supply above C when we break it, and we'll make that clear in the next few slides. Okay. AMAT has a low of 11.30. Sorry, that's dollars. I beg your pardon. Let me correct myself. AMAT has a low of 11.36 in October 2009, and just above 10 back in June. Now that's interesting as well. So what we can see then, this is a US stock. It's one to watch, okay, and one to keep an eye on, because we've got this here. The volume here, Philip, it's not massive. Would you prefer to see higher volume on those bars, or are you happy with that sort of that volume on those two?
For true accumulation, I would want to see higher than that.
Yeah,
definitely, because you've got a downtrend behind you. What may be, I'm just looking just to the left of that green arrow, you've actually got a down bar there with much higher volume. Again, that could be the start of accumulation.
Yeah.
We don't know. at the moment. We have to wait and see. But
so the jury's out on this one, but we'll follow it, see what happens next week. But certainly this is a daily chart. We've got some areas here, we've got some support here, but you wouldn't buy this because we're in a downtrend here and we're moving sideways. You wouldn't do anything with it, in fact, until you've got some sort of clear picture and some sort of clear idea as what the stock's doing. So when we go long, after you see something like bottom reversals, when it appears, there'll be a downtrend in place, as we've seen. It often, but not always, will mark the bottom, okay, or a turning point. It doesn't always do it, so keep that in mind. Now, what have I written here? Wait to make at least 3 higher lows on the bar, okay, and that means that we're actually seeing the price moving up. Then look to enter on a low volume down bar, a test, no supply, or my favourite signal, a test in a rising market, which is the best one. Tom, would you agree with that?
Well, that's the safest bet. A test in a rising market with strength in the background is your safest bet.
Yeah.
Very, very low risk entry to the long side.